Hi, it's Dan from UK Moneyman. Just talking to you for the early part of later life lending. So my speciality is lending in later life. Now, typically that's 55 plus, but we do get quite a lot of inquiries from people in their early to mid 50s because they see the adverts on TV that equity release you start to become eligible for equity release at 55. Now, that's true. Whether you should do it then is highly debatable. Quite often people in their 50s are still earning well. You've got a mortgage that needs to be paid off. Equity release really isn't designed for that sort of circumstance. So what we have is we've got high street mortgages which are getting more and more flexible going into later life, and my colleagues deal with those day in, day out and have a really thorough understanding of what can be done with those. In my field, in later life lending, we have term interest only mortgages. Now these are mortgages that are designed to fill the gap between the mortgages that you would have had all the way through your lives, buying your first home, moving house with family and maybe downsizing when the kids leave home. But the term interest only mortgage can often be quite generous on your income multiples. The lenders are quite often pretty strict on you having an amount of equity left in your house, so that if you have to downsize in order to repay the mortgage, that there's enough so that they are sure that you could buy another house in the future. But it does give you a short term, maybe a 10-year in your mid 50s term to focus on reducing the mortgage debt that you've got available, so that if you need to fall back on equity release later in life, so when you're in receipt of your pension, you've had that initial shock where your salary becomes a pension and you find that you've got less money to live on and more leisure time to spend it in. So you can reduce the amount of money that you owe in your 50s, look to roll that onto a lifetime mortgage later on. Timescales are different for everyone, okay? A lot of people now working towards 70, 75. And if you've got the income, then an interest serviced mortgage is often the better way to go. But talk to us, we'll go through all of your circumstances and make a recommendation based on you and your circumstances individually.